Good morning, good afternoon, good evening, wherever you are. So today I'm going to speak about Fibonacci retracement, and I'll just try to make it as simple as I can because we have different people who are following this channel who are at a different level of understanding. So I'll just be quick. What are Fibonacci retracements? So Fibonacci retracements, they are levels or horizontal lines that indicate support and resistance that are likely to occur. And these support and resistance levels are based on the Fibonacci numbers, or if you like, you can say they're based on the Fibonacci sequence. And what are these Fibonacci sequences? So a Fibonacci sequence is just like a series of numbers like 1, 2, 3, 5, 8, 13, 21, and 34. And how do we determine these numbers? These numbers are basically determined by adding the two numbers before it. So for example, if you add 0 plus 1, you get the answer is 1. Yeah, and then if you add 1 plus 1, you get the answer will be 2. If you add 1 plus 2, it will be 3. You add 3 plus 2 plus 3, the answer will be 5, and so on and so on. So why the name Fibonacci? So Fibonacci was a mathematician who lived in the 11th century. Some say 11th century, others say the 12th century in Italy. And in fact, the name Fibonacci was just a nickname. His real name was Leonardo Pisano Borgolo. I hope I'm getting my Italian pronunciation well. So this was the guy who invented the Fibonacci numbers and the Fibonacci sequences. Why he invented the Fibonacci sequence was, I think this guy used to be a farmer and he used to keep rabbits, so he just wanted to know the sequence of his rabbits populating and growing. So that's why he came up with the Fibonacci numbers and the Fibonacci sequence. One might ask, because some people have asked me, what are the benefits of this of the Fibonacci? So the benefit of Fibonacci retracement. Remember, we said Fibonacci retracement are just the key levels or horizontal line that shows support and resistance levels. The benefit of this support and resistance levels is some traders use this as a strategy. They use the Fibonacci strategy. Some use these levels as entry and exit points, and others use to identify these support and resistance zones, as we have said. And these support and resistance zones, you'll find that they're used to be entry and exit levels, because support and resistance levels are based on price action, and price action just basically means what price is doing or what price did previously. So if it is what price did previously, then you'll be able to identify this support and resistance level based on price action. If you have a quick look at Fibonacci retracement, remember we said they're based on numbers. This is how it's supposed to look on the chart. So from 0, 23, 38, 50, 61, there's usually a 78 somewhere here, and up to 100. If you're looking above, it will be 127. But for me, when I'm using Fibonacci retracement for trading, I love these two levels, the 50% level and the 61.8 level, which is called the golden ratio. So these are the levels that I love most. If I was to quickly show you how the Fibonacci retracement acts on a live chart. So if you are going to use the Fibonacci retracement tool or Fibonacci retracement strategy, you will come here. First to third, the third level, it's always here. Yeah, so you come and click on this tool. For me, I've saved them here on my desktop, so I can click on it. So it depends with how you want to draw the retracement. You can be, for example, tracing a market that is on an upward trend or a downward trend. So for example, for us in this scenario, we're going to trace this market that was on an upward trend. So we want to know if at all the market reached here, this is the highest point, as you can see from my trading view chart. If I was to look for selling opportunities, how do I trace this market up to the point where it reaches here, which was the originating point? Alternatively, you can find another market, let's say you can trace, let's say from here to here. So you came in and you saw the market was on a downward trend and you want to trace it as it goes up, you can still use the Fibonacci retracement. But this is the thing, now that you're going to look at the upward trend, you come here, get the Fibonacci retracement tool and draw from a swing low to a swing high. That's it. So you draw from a swing low to a swing high. Once you have done that, it will code these numbers here on the sides. And these numbers, for me, the way you look at it, it has started from 100 to 0, but you can as well do the inverse by just clicking on the settings. So if you want the settings, you just click anywhere inside the Fibonacci retracement tool and it will bring for you this setup. This is how I've set up my Fibonacci retracement. So if I come here and click on the reverse, remember we had started from 100 to 0, but if you check here right now, it's 0 to 100. So I can retrace this market from 100 point level down the way up to when it reaches the 0 level. So for example, if I was to retrace this market, I'll enter at point 100 and hold the trade all the way. If I was just to zoom in, hold the trade all the way up to 0 level. If I was to draw a line here just for us to be able to see the 0 level here, I'll be holding that market from that level. Just clone that. So I'll be holding from point 100 to point 0. Yeah, but then basically what this other pointers tell you is I can use this other level that are here, let's say the 78% level here, I can use it as my take profit level. So for example, I can say 78% there, this will be my take profit level 1, the 60%, 61% level, that will be my take profit level 2, the 50% level, that will be my take profit 3, and take profit 4, and so on and so forth. So this is how you use the Fibonacci retracement tool, because remember we said this level are the previous support and resistance level. So if I was to clear this and we come to look at it keenly, for example, our 78% level, it has been used as a support and resistance level. Here it was used as a resistance level because price reached this ceiling and reversed. If you look at it previously again, it had been used as another resistance level. If you move forward here, it has been used as a support level. So these levels are just basically used as support and resistance level. And there are traders who use only the Fibonacci retracement as their trading strategy. So for me, this is how I use my Fibonacci retracement if I'm entering a buy or sell trades. And normally, as I had said earlier, that for me, I love the two areas. My most important areas when I'm using the Fibonacci retracement level, and if you've seen, I've even given it a different color. For me, my most important area is this level. I call it the golden ratio, and the 50% level. So if I am to enter a trade, a buy or a sell, I'll wait until the market reaches the 50% level of the retracement, because when it's at the 50% retracement level, I know it's 100% that the market is on an upward trend and it will continue going up. So if I miss getting into a trade at the 50% level, you see here, normally what the market does is if it reaches the 50% level, it will try to go up, retest. When the market retests and comes back to the 50% level, for me, it's a confirmation that I'm supposed to enter into this trade for a buy. So that's how I do it. And if you look even behind, even here, the market reached here, it tried to retest and continue going down. Same way, it reached here, went up to 61%, come back. But this it retraced a little bit down, but still just means that you can enter this market. Once it retests, you can enter into this market for a continuation. The same way applies to when the market is coming down, it will reach the 50% retest and continue going down. So from me, I think this is how you use the Fibonacci retracement level, and to configure it, once again, just double click on it and you can come back inside here and check all these levels. You can include prices. If you see my levels have prices, 79.60, it has price. So if I just want to enter this trade, I'll just look at the price from there. If you want to remove the price, you just click that and the price will be gone. So these levels can either be in terms of percentages or it can be in terms of values, just the same thing, just the same thing. And you can configure these levels to be the way you want. If you want it to extend to the right, they can extend all the way to the right. You can also give these levels different colors. If you want the levels to extend all the way to the left, they can still do that, extend all the way to the left. And you can customize this thing as much as you want. You can give each level a different color for you. It depends with how it works for you. So I think for me, that's it. What else? You can put the labels. They can be left if you want. They can be top or bottom. In the middle, there it's in the middle. Or they can be at the bottom. It depends with how you want. You can just play around with this and it will work. So once again, that's how I used my Fibonacci retracement level. If I come back to my last slide for the day and recap what we have gone through today, that the Fibonacci retracement are popular tools that are used by traders to show and portray the support and resistance level based on price action, on what price did before and what you expect the price to do in the future. And how you draw this Fibonacci retracement tool is you draw from a swing low to a swing high. If I can just demonstrate that once again, the way you draw a Fibonacci retracement, you draw from a swing low like the way we did here. I'll just delete that and try it again. You point at it, you draw from a swing low to a swing high. If you're tracing the market on an upward trend, alternatively, you can draw it from a swing high to a swing low if you're tracing the market on a downward trend. There you go. So a swing low, a swing high, or a swing high, swing low. It depends with the market trend that you're tracing. I think that's it for me for today, and thank you so much. All the best and nice trading on this Friday. Thank you.